I'm Connor McKenna, and welcome to the latest edition of Luma's Market Report, where every quarter we get you up to speed on the latest trends in M&A and capital markets in digital media and marketing. This is my quick recap on some of the key underlying trends behind the activity that occurred this quarter. But remember to go to our site to download the full report that has robust data on all of the M&A activity and capital markets transactions throughout the quarter. Now let's get started. Wow, and what a quarter this quarter has been. I mean, I know we said there'd be a ton of momentum coming out of 2020, but oh my God, the amount of M&A, IPOs, and lots of SPAC activity going on. It is just insane what is happening across ad tech, MarTech, and digital content. This is driven by a perfect storm of macro trends such as government stimulus, COVID recovery, and continued cheap capital, industry trends like the pandemic inflection around streaming, e-commerce and gaming, and market trends that still trade at all-time highs and have a ton of IPO and SPAC activity. So let's jump into ad tech, which for us was the most active sector. We saw a doubling of the amount of deals from Q4, which was already a very strong quarter. And just to put in perspective how crazy the ad tech ecosystem was this quarter, in the last 3 months alone, there were 7 transactions over $1 billion in ad tech. That's across M&A, companies filing IPOs, and company announcing de-SPAC transactions. But for perspective, that is more than double the amount of billion-dollar transactions that we saw in ad tech over the last 5 years. So that's 3 months, 5 years, doubling the activity. So just very clear, ad tech is having a moment right now. And it's not just the overall activity, it's also the buyers. So historically, ad tech was very reliant on outside buyers coming in. But now that we have scaled multiple scaled billion-dollar plus companies in ad tech, they're able to do scaled transactions themselves. You see this with Magnite buying SpotX for over $1.4 billion, and Digital Turbine doing 3 transactions collectively over $1 billion in deal value and being rewarded for it. They are actually trading on pops every time they make a deal announcement. We also have private equity jumping back in a big way with Triple Lift announcing a majority buyout by Vista. We have not seen that size transaction really ever in the ad tech space from private equity, and more IPO and SPAC conversations in the background. A lot of this is driven by continued robust valuations. While there were some sell-offs after the Google news in this quarter, ad tech valuations remain very robust with over or about 20x LTM revenue across the public ad tech companies. And we're just starting to see that amount of activity or that level of valuations trickle into the private valuations as well. This was also a very strong quarter for MarTech. It stayed pretty much on par with Q4 of 2020 and up over 140% from last year in terms of M&A scale. There also was a continued public market interest as both Qualtrics and SEMrush were able to get out into the public markets and did pretty successful posts. But broadly, looking at the MarTech sector, there was a little bit more impact from some fears around interest rate rising, which led to a bigger sell-off of public MarTech companies throughout this quarter. In fact, 10 of 13 MarTech companies actually traded below the S&P for the quarter. That said, valuations still remain around 20 times LTM revenue, so still quite robust in an area where we expect to see continued conversations, especially as the privacy and data dialogues perpetuate throughout the ecosystem. And then in digital content, this was the only area that actually saw a drop-off from Q4, and pretty big one, but that was after a pretty unprecedented amount of activity at the end of last year. In fact, digital content still saw over 10 transactions, and the story here was really around mobile gaming. We saw a number of transactions across the mobile gaming ecosystem and a few scaled ones, including EA buying Glue, as well as some very significant IPOs such as Roblox, Playtika, and Huge Games. And then finally, SPACs. This is the thing that everyone was talking about at the end of 2020 and only accelerated throughout this quarter. During this quarter, there was somehow a massive inflection point in SPACs, such that there was more SPACs launched and more capital raised from SPACs than there was in all of 2020, which was already a record year. At this point, we now have 433 active SPACs and about $140 billion in trust. So that means there's about $500 billion of deals minimum that will need to get done for these SPACs to get out. Needless to say, it's going to be a very active 2 years. And while we do have some concerns about the supply-demand imbalance, for now, it's game on in SPACs as they are actively seeking opportunities in this sector. And that's the recap on the trends that are underlying some of the data in this ecosystem. As a reminder, definitely go to our site, download the report. There's a ton more in there, all the details on the transactions and capital markets activity. I look forward to catching up again next quarter, and I'm sure we'll have a ton more to talk about as this activity is not slowing down at all. I'm Connor McKenna, signing off.